Hello and welcome to CMS Forex News. I'm Nick Nassad. Today is Tuesday, March 11th. Let's start in the UK, where for the 7th month in a row, the number of surveyors reporting a drop in housing prices outpaced those seeing prices climbing. Inventories of unsold homes continue to increase, encouraging buyers to negotiate lower prices. The downturn in housing is a big factor in the recent slowdown of the UK economy. The BRC Retail Sales Monitor showed sales slowing to an annual pace of 1.5% in February compared to 2.6% in January. Clearance sales were a strong factor in boosting January's figure, but now, with consumer confidence mired in multi-year lows, it is likely that consumers will tighten their belts in the coming months. The ZEW Center for European Economic Research said its index of investor and analyst expectations in Germany rose to -32 from -39.5 in February. It's the second straight month that the data beat expectations. This data goes hand in hand with the IFO Business Climate Index, which has shown 2 months of improvement in German business conditions. The German economy seems to be weathering the slowdown in the US better than other Eurozone countries. The euro-dollar pair had a wild swing this session. Following the ZEW report, the pair surged 150 pips in the euro's favor, coming close to the 1.55 level. However, as New York trading got underway, the Fed announced that it will inject $200 billion into the banking system in order to ease credit markets. The announcement was welcomed by financial firms, as the Fed will lend treasuries in exchange for debt that includes mortgage-backed securities. The news boosted U.S. stock markets and the dollar. In New York trading, the euro-dollar pair fell around 180 pips. The dollar-yen pair rallied from its 8-year low, with the pair's gains accelerating during New York trading. U.S. equities rallied after 3 sessions of losses, with the Dow Industrials Index up more than 400 points at the day's close. The dollar-yen pair was trading near 103, about 100 pips higher than its level at the New York Open. Risk appetite returned to carry trade pairs, as can be seen here in the Aussie yen. The yen has been on a tear recently as U.S. equities faltered. Today's rally in stocks, however, helped push up the value of high-yielding currencies like the Australian dollar. The pair was up 190 pips since the New York Open and almost 280 pips from its session low overnight. The pair broke above yesterday's high and was trading in the range seen last Friday. The U.S. trade deficit expanded, but at a smaller extent than economists had anticipated. Total imports grew by $2.7 billion, while exports were up $2.4 billion. In Canada, the trade surplus was better than expected, posting a balance of 3.3 billion Canadian dollars. Exports increased at their fastest pace in more than a year, totaling 38 billion Canadian dollars. A big portion of the increase was driven primarily by increases to prices and not necessarily an increase of volume of goods traded. The new housing price index in Canada also performed better than forecasted. Prices rose 0.6% on the month. On the year, prices rose 6.5%, the second year-over-year increase following 16 months in which gains in new housing prices had been decelerating. The US dollar-Canadian dollar started the session falling in favor of the loonie until the New York trading session, when the pair found support near 0.9890. From here, it recovered around 75 pips to set a session high near 0.9970. Tonight, Japan will reveal several fundamental indicators, including revised GDP data for the 4th quarter, the corporate goods price index, current account, consumer confidence, and the Bank of Japan meeting minutes. Overnight, the UK will post trade balance data, while the Eurozone unveils its industrial production figures. Switzerland finishes the Euro session off with its ZEW expectations. There are no big releases for the US tomorrow, except for the weekly crude oil inventories, which will have an impact on oil futures. And that's it for this Tuesday edition of our broadcast. I'm Nick Nassad. Thank you very much for joining us, and happy trading.